Yeah, so Steve sent me a chart. My friend Steve Penny,
Hmm.
and man, the market, I think it's probably going to snap. It's snapped a little bit, right?
Yeah.
It's been an ugly couple weeks. And do we know what the Fed's going to do? Are they doing a policy error to try to get more political capital to print more? Probably, or are they controlling inflation through a stock market crash? Maybe. I mean,
Hmm.
the banks are short in gold, probably for that reason. But
Right.
so I mean, it's a historic opportunity in buying gold. So I mean, if you're putting money into the market right now, gold's a great place, but uranium's a good place too. So maybe a little of each. But
Yeah, uranium is more speculative, but at the end of the day, it's the energy argument. And you and I made that on our past videos. We don't have to
yeah,
necessarily go into that, but there's a huge energy argument to be made that uranium really is the best source for grid power,
for sure, for sure.
for the next 10 to 20 years. Hey everybody, this is 𝙈𝙀𝙾𝙆𝙆 at 𝙂𝙎𝙋𝙍𝙊𝙎. We're recording this on December 2nd, 2021. We're going to send it out to our Patreon members ahead of the game so they can get early access to this, and then we'll release it on the YouTube channel next week. I'm joined by Steve Mueller, the Dissident Dentist, to talk uranium. You've seen him on the channel before. We talked uranium several times, and he's been our source of all things uranium. He probably knows more about it than anybody else I know just because he's an avid researcher and an investor. How you doing, Steve?
I'm doing really well, thanks. Yeah, it's good to be back with you.
Yeah, I appreciate it. I always have fun talking about this because I just realized the breadth of information you have. We're going to go a little quick today because I got to jet out of here to take my son to
Sure.
Taekwondo.
Yeah.
So he's actually prepared slides. That's why I love having Steve on the program. He's very organized, which more than I am in the uranium space. All right, here we go. So I like your title here, volatility of a crypto coin in the commodities.
And it's brutal. Yeah, this is December, what, 2nd, 3rd, whatever we're today. And
Yeah.
that's and next week I have no idea where we are next week. But the nice thing is, because it is a commodity, it's not been funded well. I'm pretty sure I know where we're going to be next year, but I don't know where we're going to be next week.
So here's the current spot price, and I realize spot price is probably not the most accurate. This chart's not the
Yeah,
most accurate, but
that's fine. Yeah,
I
yeah,
mean, on a yearly chart, it still looks pretty good. Still up 48% on the year. So, and if you go back to 2017, when the uranium producers were really in pain, it was under $20.
I mean, below everybody's cost of production. I mean,
Yeah. What is the average cost of production now? Do you know?
yeah, the lowest was Kazatomprom, and they were at $17. But right now, if you include their dividends and their other costs of administration, they're at 32.
Oh,
So
wow. Yeah.
yeah, because I mean, we were just talking. I think you were talking with Antonio about how some of the miners, the cost of the acid and the cost of gas and the cost of every cost,
Yeah.
human wage,
Costs are going up.
everything's going up. So yeah, it's an interesting time.
So let's jump right into it. I like the picture you have here. You said this is like a national park by you?
Yeah, state park. Yeah, yeah.
Look at all this deer. It's beautiful. For the first time in Grapevine, of course, I live in the middle of Dallas-Fort Worth, and we were driving down the road and we saw 3 deer. And I'm like, I've never seen deer in Grapevine before. Just right there at the side of the highway. It was awesome.
Grab your bow. Get out there.
I have a hard time killing Bambi. For some reason, deer is, I don't have a hard time with other stuff, but deer, I don't know.
Yeah.
All right, so here we go. So here, this is the VIX chart. I got you.
Yeah, so Steve sent me a chart. My friend Steve Penny, and man, the market, I think it's probably going to snap. It's snapped a little bit, right?
Yeah.
It's been an ugly couple weeks. And do we know what the Fed's going to do? Are they doing a policy error to try to get more political capital to print more? Probably, or are they controlling inflation through a stock market crash? Maybe. I mean, the banks are short in gold, probably for that reason. But,
right.
So I mean, it's a historic opportunity in buying gold. So I mean, if you're putting money into the market right now, gold's a great place, but uranium's a good place too. So maybe a little of each. But
yeah, uranium is more speculative, but at the end of the day, it's the energy argument. And you and I made that on our past videos. We don't have to necessarily go into that, but there's a huge energy argument to be made that uranium really is the best source for grid power.
For sure.
For the next 10 to 20 years until, Maybe we have a new Tesla reborn and he can get us to the free energy, but until that happens.
Yeah.
So you have uranium prices since 1930. So what are we seeing on the screen here?
Well, in the 40s, this is actually kind of a little incorrect. And in the 40s, during the war, there's not real good data. I've kind of looked into it, and this is from Cameco actually. But sometimes we would pay a 1/10 of an ounce of gold. So that would have been an enormous amount. It would have been $3, sure, but if you ingest, what's a 1/10 of an ounce of gold? $180, right? In the 40s. So we typically see, like you said, boom and busts, and we've been at $20. So do we see another 12, 13, 14x? Probably. So do I expect $200, $300 uranium? Yeah, that would be normal. It's done it 3 times before. Not just this shows twice, but it happened during World War II as well. So we've had three different booms where we saw more than a 10x. So $200 uranium, $300 uranium would be, you have 3 historical precedents.
Sure.
So, and that's another price in gold. But yeah,
so it's really low compared to gold.
But it broke out, and copper's
right here.
But yeah.
Descending wedge pattern broke out above that wedge. A little bit of a bullish sign there.
Yeah.
All right.
Good.
𝙂𝙊𝙇𝙑𝙀𝙍.
Yeah. So they were saying they put on this. This is one of their slides from the conference in France. They were saying that if you don't have your supply of uranium locked down, you probably need to go do that, and we can't help you because we're already booked. And I think a lot of jaws dropped. They're pretty
wow.
Because usually everybody buys from Kazatomprom because they've got extra, but because of supply chain disruptions, that didn't happen. So said you better get out there.
Now, have you heard that story about Germany shutting down most of its nuclear reactors?
Yeah, they're in the process of shutting down a lot of them, but that's a very of the global uranium market, that's pretty small.
Yeah, and I think it's insane because they were already having grid problems with getting enough power, because they're doing something similar to what we did in Texas, which they're trying to replace with renewables, and it doesn't work. So you have these politicians doing this almost suicidal thing of, hey, we're going to shut down the most reliable energy we have, and I bet they come back online after too long.
Yeah.
What it also makes them very susceptible to is the natural gas flowing through Georgia back into Europe, and politically that, if they get into any troubles with Georgia or Russia, they could be in serious trouble. So I bet you could see those started back up as soon as that happens.
Well, their cost per kilowatt hour jumped 30 cents.
Yeah.
Mine, I don't know what yours is. Mine jumped from 9 cents a kilowatt hour to 18 cents a kilowatt hour this past year. And that's very frustrating to have a 100% increase, but to jump from 30 to 60 like they did.
But we're an electrical co-op, and I was like, when we bought the house 9 years ago, I was like, I don't want a co-op, right? Because there's no competition. I thought no competition, but I will say this: they're the lowest rate per kilowatt hour before the variable part. I mean, the base rate is the lowest anywhere. And whenever we had the big freeze and stuff, they didn't jack up their prices as much as some other companies did, because I guess of their pricing ability in the market, or the ability to get the best price. So there were some people in the area where it jumped up, they had $1,800 bills when we had, 𝙎𝙄𝙇𝙑 in Texas,
right,
in February. And, it didn't. So yeah, I will say this for my co-op, they actually, they were probably one of the best. I mean, they did increase prices. It wasn't like all of our neighboring towns. So anyway, I don't know all the reasons for that, but I was surprised.
But yeah, I think Germany's going to have a really rough winter, and I think you're right. A lot of they're going to join France, India, Russia, and China, and building nuclear reactors right and left.
Yeah, I know what they want and why they want it, but honestly, you're not going to get it that way. Okay, let's talk about this one.
Yeah, this is outdated information, but it's still pretty accurate. The earliest MacArthur River could come back on now is really late 23, early 24. Cameco's big idol of mine.
Yeah.
Because so many of their staff need to go back through and get re-licensed and permitted up in Canada with all the silly bureaucracy in Canada. So there's just a huge supply deficit that's going to last years and years. And this was before I showed it in a dark blue slide. This is before some of the new demand we saw from India and China. So and we're still not back to a price that is going to encourage miners to get financed.
So here you're talking about demand. Here you're going more into demand versus supply.
Yeah.
So re-emerging production.
150 more reactors by 2035, which is more pounds than just in the next 10, 15 years. China wants more pounds than the entire globe wanted the last 35 years.
Yeah, and talking about China, they are trying to get off of coal, and the only way to do it and get cleaner is actually nuclear. So nuclear has been demonized in the past for not being clean. It's a hell of a lot cleaner than coal.
Yeah.
Not only that, but they can't expand coal as fast enough.
No.
Without creating, what would happen to China was they would have to start importing it, and it creates an energy dependency, which they don't want.
Right. Yeah.
And they can get better bang for buck by doing a deal like with Russia and some other companies to get uranium, and you get so much more kilowatt hours per the dollar spent. That's why they're going big on uranium.
Yep.
It's as much economic as it is geopolitical. There's two reasons why they're doing it.
For sure. So Sprott has been squeezing the market. Kind of when I first came on, I said I think these guys are going to squeeze the market, and they have.
Yeah.
And the first, this talks about the entire industry. They're not the only ones. Miners have been buying. Your royalty company, 𝙂𝙊𝙇𝙍, has been buying.
Yeah.
𝙎𝙄𝙀𝙍𝙊𝙎 in London's been buying. There's a lot of people buying, and the spot market's evaporating. I think by next summer the spot price probably doubles, goes to 80. But Sprott just raised their prospectus to 3.5 billion.
Wow.
That's going to be enough money to dry up whatever pounds are still floating around out there.
Yeah, they're going after it, and it's going to be a good deal for Sprott, because if they buy up all that, guess who people are going to come to relieve their demand burdens. So who is this from? 𝙎𝙬𝙇𝙊𝙎.
Yeah. So 𝙎𝙬𝙇 follows Paladin pretty closely in Australia.
Okay.
And they own the big 𝙈𝙬𝙊𝙆 mine that's on care and maintenance.
Mm-hmm.
And the CEO said, yeah, so one of our part owners, the Chinese, owns 25%, and they said they want to restart now. They said, hey, start that back up. And they're like, nah, we don't want to. The price isn't quite high enough. And they're like, please restart now. And they're like, buy a little more. They're negotiating, and there's some information I can't share publicly, but there's a lot of private offtake agreements and term contracts.
Oh, I bet stuff below the surface you don't even see. We're talking about that in silver. I did a live stream about silver. When are these companies going to go directly to miners? And then I've had people call me and say it's already happening. And then I had people call me saying, Rob, you need to set up a brokerage, because you have a lot of contacts in the mining industry, and all you got to do is find them buyers. And so apparently there's some lift in getting, private deals done for brokered silver. It would not surprise me if the same things happen in uranium. And to be honest with you, Steve, as we hit supply shortages in copper and stuff like that, it wouldn't surprise me if this kind of stuff's going on all over the commodity complex.
I think it is, but I know for sure in uranium and silver it is, because I've talked to my, but
the first green bond backed by nuclear. Okay, how can a green bond be backed by nuclear? I thought nuclear was dirty.
No. But this is that's just an enormous amount of money for the industry. I mean, the whole market is only 41 billion, and so you're talking $500 million that's going to come in. And the EU taxonomy, if that passes, that's a couple $100 billion. I mean, that's several times the market cap.
Sure.
So I mean, basically, pick a stock, you're going to have a multiple.
Cup and handle. The famous cup and handle pattern. We talk about this in gold all the time.
So this is the Sprott Uranium Trust, and the physical pounds. I think it's going to explode high pretty quick, and so does John.
You can see this is like a little bit of rising wedge / flag pattern. I mean, it hasn't completely. I think if you drew this here, you would call it a very bullish wedge.
Man, it's looking pretty bullish to me. I mean,
Yeah.
we may have another week or two, or three, but like I said, by the summer, even by the spring, I expect this to make me pretty happy. So yeah, we're going.
Trading view.
Yeah, and I think when you and I first talked, it was down. I think it was at 52. I want to say when you and I talked, and I said it should be going down. And it's going up. We should.
Oh, going right around here somewhere. Yeah, we did.
Oh, that. I think when he talked, I think it was at 52. But
yeah.
Anyway.
It was because we start this back. Was it August or September? I think it was September.
It was early. It was in the pit of September around.
It was in here, yeah. So that was really low.
And so yeah. So anyway, but I think this blue box, it's a great time to buy. It bounced into 78 today, and then bounced back up to 81.
Yeah.
I think it's a good time to buy today.
See all these trend lines going up. That's what you want to see. Trend lines going up over a long period of time. Yeah. And it's okay if it gets overheated and falls down. This is your buying opportunity.
Right. And not that it won't back. I mean, we may see 75 later this month. I don't know. Maybe. But
is this the 200-day, this red line here?
Yeah. Yep.
Yeah. So it may challenge a 200-day.
100 day.
Oh, 100-day. But if it challenges the 100-day, I think it's a bullish signal because of the fundamentals.
Now, I think NextGen hit its 200-day today and then started bouncing off in the last 30 minutes before close.
So this is North Shore Global Uranium Mining ETF, just for people that weren't catching on to what we're.
Which Sprott just bought. Then they're going to market the hell out of it. It's going to blow up.
Okay. Now we got Energy Fuels Incorporated.
Yeah, and I just wanted to show the pullbacks. We've had a 27, 28% pullback now. This is from yesterday, but
yeah.
We have these, going back to studying the last couple of bull markets from the 70s and 2007. We had, I think we had 7 or 8, 35% each in each bull market, and we had probably 15 or 20, 27% ones, 25% ones. So we're at 80 days now of a pullback, and we're at 27% on most of the stocks. So I think this one's probably about towards the end of the pullback.
All right, we're going to get a few more here, and then we're going to have to wrap it up. So we got Uranium Royalty Corp.
So this one I like because the ETFs have to buy it because it's part of the ETF.
Yeah.
And because it's a tight share structure, it's gonna do those explosive gap up moves like you saw in September. It's gonna be more prone to that than most.
And it's it's a decent way to get in if you're new to the space and you don't know specific companies, and you're not that you can get into one of these types of deals and have a fair amount of safety. The royalty companies will do fairly well, but you could get higher upside with some of the more specific names.
Yeah, for sure. So I think we'll have a little bit of deflation just briefly because of the Fed's new policy. We're talking about the taper, but I think we're going to go back into some pretty hellacious inflation. But not right now. I think we're going to get deflation actually, but
money supply.
Dude, it's just so bad. We're about a quadrillion of derivatives.
Extra's pyramid here.
Yeah.
Get into your gold and silver and get out of all the derivatives. That's what that tells you.
I think energy and precious metals are the two plays.
Well, commodities. Yeah. See, commodities is up here, but I argue when I redid my extras pyramid a couple of years ago, I threw commodities down here. I pushed them closer to the bottom because they're ETFs they're getting so scarce. It's not like it used to be when he first did this pyramid.
Yeah.
Commodities are not as plentiful. And what happens is their scarcity pushes their value down, much like it does for gold and silver. So we're going to end up for this awesome quote. It does not take a majority to prevail, but rather an irate, tireless minority keen on setting brush fires of freedom in the minds of men. And that was, the Declaration of Independence, the Revolutionary War, and,
might be that time again.
Well, yeah, it could be that time again.
I don't know. We'll see.
We hope it's not. We hope and pray it's not. But at the end of the day, anyway, that's a whole nother debate. We could get just keep it on uranium, though. It looks positive going forward because, again, it's the only solution to grid power, unless all of a sudden, JP Morgan, who bought Tesla's free energy research, has developed privately the free energy and wants to release it to the market. Unless that happens, where are you going to go for grid energy but uranium?
Yeah.
You're not going to get a hydroelectric or geothermal everywhere. It's limited certain areas. The solar and the wind aren't consistent base load. The fossil fuels are there, but they want to demonize them and say they're dirty. So, I mean, where else is there to go?
Yeah, we're a decade or more out, probably several decades from fusion working.
Fusion, 0-point modules, all that kind of science fiction stuff that you see that everybody talks about, you know. And the funny thing is, if you look at sci-fi movies, you know, 20 years ago, they say by the year 2020, we're going to have flying space cars. And here we are in 2021 and we're nowhere near it, right? We've got Teslas crashing on the sides of roads.
Teslas, yeah.
Yeah, we got Teslas blowing up on their own. Yeah, I saw a picture of a Tesla plugged into a house and it blew up and burned down the house. So we're not quite to the Jetsons Jetsons landscape just yet. Well, we want to thank Steve so much for joining us. We know he just got off of work. You know, we got to run to do stuff with the kids, but he made time to put all this together for us. So just
stock picks and recommendations, just for your own research, but just
exactly. We're not your financial advisors, just stuff we like to look at, throwing it out there. Do your own research. Don't listen to us. Don't take recommendations on us. This is stuff we like. It's like, you know, I like the Dallas Cowboys, so I'll talk about the Dallas Cowboys. But that doesn't mean that you need to go buy their jersey. Do your own research first. So any last things you want to wrap up? What do you think uranium is going to do in the next year? Have any idea?
I think we'll finally get to a cost that incentivizes production, but we have to be there. We have to stay there for at least 3 to 4 months for the financing to take place. But I think
got to be bankable. That's the thing. Banks finance all this stuff, and they're not going to finance it if they're seeing this on the chart and it's not staying. It's not reaching a certain plateau. They can say, okay, now I see the base case for your mine.
But I think between the energy shortage we see and coal and gas and oil and all that, and the cost of inflation and all that stuff, I think it's going to drive enough political will that it drives all energy up enough that.
Yeah, the politicians want the quote unquote green energy, and they may not want nuclear, but as soon as their constituents are either dying in the heat in the South or freezing to death in the winter in the North, they're going to change their minds really quick. Yeah, so we'll see what happens.
Actually, I think we see the move that we need. So it'll be pretty fun.
Well, Mr. Mueller, thank you so much for joining the program again. We appreciate your updates. Like I said, we'll get this out to Patreon members first, and then we'll put it out on the channel next week, so you see it the second week of December. But we appreciate everything that you have done for us and provided for us. You're a master at networking in this space and gathering information and intel, and it's very much appreciated.
My pleasure. Have a good one. Bye.
Thank you guys so much for watching today's video. We appreciate it. Please remember to like, subscribe, and share, and hit that notification button so you get those notifications when new content comes out. If you like what we're doing here, please consider supporting us on Patreon. Those members of Patreon will get extra special content delivered to them as well.